What's up, guys? So, do you want to beat the psychology of a trading operator? Now, does the market reverse its trend the moment you buy or sell your options? So, welcome back to another video on options trading. So, today we're going to talk about two of the most common indicators that help us understand trading and market situations: open interest and volume. Now, before we move any further, I hope you like what we're doing. I hope you enjoy the content. If you do, definitely hit the like and the subscribe button. And if you want, do share these videos with your friends as well. Now, without further ado, right? So, intraday trading is characterized by fast-paced decision-making and short holding periods, right? And that demands a comprehensive understanding of various market indicators. Now, one such critical indicator is open interest. Now, open interest is a valuable tool, especially for intraday traders, to gauge market sentiment, identify potential price movements, and make informed trading decisions. So, if that's what interests you, let's find out more in the video. So let's get into understanding what is open interest, right? Now, at a very definition level, open interest is a number that tells you how many futures or options contracts are currently outstanding or open in the market. Now, this information indicates how many open positions are there. It is very useful to understand how liquid the market is. By analyzing open interest carefully, you can understand where all the smart people are betting their money, and this way you can gauge on a very short-term basis what the support and resistance is of the market. Now, open interest is also one of the most important indicators for traders. But there is one more tool that helps in stock analysis, and it's called volume. Now, volume is a stock market, means the total number of shares traded in a specific time frame. Now, this would include every share that is bought and sold during that period. Now, say 100 stocks of a company were purchased and sold again in one trading day. The trading volume for that stock would be 200, even though the same 100 stocks have been traded in the market. Now, broadly, high volume indicates the number of times shares have exchanged hands. So now that we have, say, some basic understanding of what open interest is and what volume is, there are some important trends that are associated with it. Let's understand each of them one by one. For the first one, we have something called as the long build-up trend. Now, it refers to a sustained increase in the number of open contracts for a particular stock over an extended period. Now, this trend suggests growing interest and participation from traders and investors who are establishing or holding long positions in the anticipation of future price movement. It broadly reflects a bullish sentiment in the market, with market participants accumulating positions with the expectation of favorable outcomes or rising prices. Next up, we have the long liquidation trend. Now, there is a sustained decrease in the number of open contracts for a specific stock. Now, this trend indicates that traders and investors who previously held long positions are now closing or liquidating their positions. Now, long liquidation typically occurs when market sentiment turns bearish or when there is a lack of confidence in the asset's price direction. The next one is an interesting one. It's called the short build-up trend. I'm sure you've heard of this before, right? Now, it refers to an increase in the number of open contracts over an extended period of time where traders and investors are establishing or holding short positions. Now, short build-up indicates growing interest from participants who are able to betting on the asset's price to decline in the future. Now, this trend reflects a bearish sentiment in the market, with traders accumulating short positions in anticipation of a potential price decline. And finally, we have something called as a short covering trend. This one for sure you've heard, right? This trend signifies a decrease in the number of open short positions for a specific asset over time. It indicates traders and investors are closing out their short position. Now, this is often due to a price increase or to mitigate the potential of loss, reflecting a shift from bearish to neutral or bullish sentiment.